Hey everyone, Brett Fogel here with a market update. We've seen a lot of new things in the markets here, and so stick around till the end. I've got some really interesting new analysis to share at the end of this video, so you definitely want to check that out. And a little bit of a new format here. By the way, if you like the new format, be sure and like and comment below. And as always, if you like the content, hit the like button and subscribe if you're new here. So let's dive right in here. I want to just talk about Bitcoin here and where we are likely going to go. I think we're due for a pullback here. We've come up to that 38,000 level, having some resistance here, which is understandable. We're in this nice upward trending channel, as we can see. And so we've come a ways up here, and I think it's overdue for a pullback at this 38K level. Above here, I think we would rally, but I think it makes more sense, and some other charts will show you. I think we pull back here, maybe retest that 32,000 level. That would be awesome because it will give us that nice big bounce for a more sustained push to the upside. Maybe we come down to 30K even, but I do expect that level to hold. And so as you can see here, I'll just open this up in terms of this rejection at 38K, coming back somewhere in this range and then pushing higher, breaking that 30K level. And then what I would expect is to push through, maybe go up to 42, 43K, and somewhat of a pullback and retest this level. But I do think then we head up to the 48K, 50K level range there, which is the Fibonacci golden pocket, the 0.618 to 0.65 area, which is pretty common on these Fib retracements. And we'll talk a little bit about where I think we go from there, and then how we get to 100,000, even 155,000 this cycle. So that's going to be exciting. So we'll just have to wait and see. I think it's a couple weeks of maybe downward sideways pressure, and that would be, some profit taking is in order, so the bulls can regroup and really push back off that 32K level or off the bottom range of this this upward trending channel. So with that out of the way, let's jump over to the DXY real quick and just see, DXY has been falling nicely. We were talking about this thing pushing up to the 107 level, and I was forecasting we would reject there, which we did. We came back and retested it here once again, but it was nice to see that that did not hold, and we've been heading lower ever since in this nice downward trending channel. So, of course, an inverse relationship to Bitcoin and inverse correlation, rather. I mean, they're not really causal to the other. It's just mostly inversely correlated. So would love to see this continue to drop on the DXY, and if we do see a drastic drop down through the lower range of this trend channel, then we would also expect to see a push higher in Bitcoin, which is still possible, but I would rather see it kind of pull back and regroup for a bigger, more sustained bounce after that. Just to take a look at the monthly charts here, I'll open this up here. This is a monthly chart of Bitcoin, and so these are two case studies on the Fibonacci analysis for Bitcoin, and overlaid this is a potential macro bull flag. So the spoiler alert is this macro bull flag has a measured move if we break out to out of this range here to exactly where I'm projecting the possible market cycle high in the next cycle is. And you see I have them labeled here as likely 100K Bitcoin. We were talking about that in the last cycle and all the reasons why that should happen. I think for sure we will hit 100K Bitcoin in this next bull run, and maybe sooner than you might think. We'll look at some scenarios of how that could happen, and then the probable range of coming up to around 155K at the 2.618 Fibonacci, and then that possible target of just around 210,000 on Bitcoin at the 3.618. Now, why did we say that, and why can we sort of extrapolate that? Well, on the last cycle, if you haven't already realized, from the market cycle high back in 2017 to the market cycle low, if we just extend that out, the 3.618 took us exactly to this market cycle top where we topped out. Okay, so that's why I'm overlaying this again. Now keep that in mind for the extra analysis at the end of this, where we're going to also look at where the next bear market bottom could be, sort of based on this, and we're going to be looking at a Fibonacci extension versus the Fibonacci retracement here. So you want to stick around for that. Also looking at the monthly MACD course, we have this nice push higher. Nice to see that in terms of the charts. I'll move it over so you can see that a little better and behind my head here. But, like to see this continuing higher and gaining momentum. As a reminder, if we go back to the 2019 range after that nice parabola, much like we've had here recently, just on this, let me move that left a bit, it did look like we were going to head much higher. We had 3 bars of deep green and then some light green, and it kind of fizzled out for about 12 months before we had the big rally. Now, some people are anticipating that, and we go sideways for a while, but there's a growing number of people, including Bob Lucas and some other smart investors, as well as myself. I think that we front run this next run. And if any of the 9 things I've identified happen, that could be the catalyst for this next bull run. So let's just dive into that. And I will come to this chart next. But I've covered this in a previous video, but I've added some factors of what could take us up to these higher levels faster. So think of each of these 9 reasons, and I'm sure there's a 10th one in there. I'm just going to be very careful in adding that to make it the right one. But imagine these are all small campfires, and any one of them has the ability to turn the whole thing into a blaze. So if these are 9 little small campfires around each other, much like the California wildfires, they can ignite each other and really make this thing go up in a blaze. So to recap that, and you can also look into this, I've got this on a TradingView published article where it plays over time. So we'll see if this was right. But so we talked about BlackRock and Fidelity, ETF approval. Certainly everybody is expecting that. And some are saying it's priced in. I don't think it's priced in fully because we just don't know. Might see a massive push higher with some profit taking in that range. And I'll take a look at this, where that might happen. But also QE money printing, we're seeing China already starting to do that, and we're going to probably have to start doing that because of the U.S. debt that we owe at these high interest rates. So they've either got to reduce interest rates to be able to afford this debt and probably likely do QE printing soon. And as soon as that happens, we're going to see money flow into risk-on assets like stocks, tech stocks, and of course Bitcoin and crypto, like we saw fuel the 2021 bull run. Number 3 is bank failures. We've seen recent bank failures. Citizens Bank, the regional, not the national, went under. And as we know, Janet Yellen's not going to be supporting these smaller banks that are not systemic and don't present systemic risk. So look for more regional bank failures. And also understand that back when the interest rates were around 0 to 2%, the government was loaning money to these banks so they could loan it out and make a profit around 3 or 4%. And they said they were not going to raise interest rates much higher. And of course we did. So interest rates around 7-8%. These regional banks are losing money on those loans right now. And so look for more bank failures, and that might trigger more bank runs and really a flight to quality, as Larry Fink from BlackRock is now saying publicly that investors will likely move money into crypto, meaning Bitcoin and Ethereum, which is where they have their 2 ETFs applied for, and most likely they'll get there first. So that's number 3. Number 4, hyperinflation and de-dollarization. Now the BRICS nations have been quietly continuing forward with their plan to use less dollars, so less demand equals more supply of dollars, which can lead to hyperinflation. If they start using more of their own gold-backed currencies and the Chinese yuan, that means less demand for dollars and more supply, meaning that's just going to create a hyperinflation environment if that plays out. And that's maybe the slow mover. Maybe that's the straw that breaks the camel's back. We'll have to see, but that is still moving ahead. Saw a news article recently and pictures with all of the leaders, Putin and the leader of China as well, Chairman Mao, and the other states, heads of state from Brazil and India and the other BRICS nations. So that's still in the works. Corporate accumulation, MicroStrategy has publicly been saying that Michael is planning to release another $750 million in corporate shares and common stock to buy more Bitcoin. He's also publicly stated they're a very profitable company, and their sole purpose now is to service the debt on the money they borrowed to buy Bitcoin, and with any additional profits, buy more Bitcoin. So that's going to create a catalyst and a supply shock, as we've seen more Bitcoin going off of exchanges onto cold storage. And just recently, we've passed I think the highest number of new Bitcoin wallets in a day a couple of weeks ago. And I think the article I saw the other day, we now have 81,000 Bitcoin millionaires. So these coins are flowing off of the exchanges, creating more of a supply shock, which can be triggered by any big buying. MicroStrategy and then Apple, Tesla. Once they start diving in, you're going to see an avalanche of more of these bigger companies not wanting to be late to the party and starting to buy, and that'll trigger sort of a musical chairs type of event. Everyone trying to get some Bitcoin, and come after your Bitcoin. So make sure you're holding and buying in dollar cost averaging, not financial advice, just smart things to think about, smart advice. Also, country accumulation in reserve currency. We've just had another country start to talk about that and go towards Bitcoin as a reserve currency. Michael Saylor also encouraging Turkey to solve their currency issues by adopting Bitcoin. So I think we'll see more of that in this next bull cycle. And also the pulse halving, this is another interesting point that most people haven't thought of. When the halving does come, there's going to be half as many Bitcoin and half as much to sell. The miners represent around 12 billion per year in selling Bitcoin to pay for their miners, to pay for all of the other expenses. And they borrowed a lot of that up front to buy these rigs and also the energy costs. So that's going to cut the sales pressure in half from the miners. So that's another small campfire burning, as well as the less supply, increasing demand shock, which we talked about. Number 9 is political pressure for Bitcoin and crypto. We're starting to see more and more politicians start to put pressure on that. Senator Loomis, which was going after Binance, and not to be against crypto. She's pro-crypto. It's to go against these money laundering other exchanges, which is now the SEC obviously has really targeted Binance for those similar reasons, and CZ, the head of Binance, having to step down as the CEO. So what's number 10? We don't know. It could be any number of things, and I'm saving that spot for maybe the bigger one that ignites the whole fire here. But just looking at this again with the Fibonacci targets. Now this price here, these are the exact price bars from this prior cycle back in 2021, taking it all the way up to the cycle high very quickly. So it's looking more and more, and it's overlaying fairly well. So if we see that play out and pushing up here right into that golden pocket, which we've identified already, and around that 48K range, maybe pulling back there, see some profit taking, and then pushing up some resistance at the market cycle high. Certainly would expect that. And then pushing up to 100,000. I think we do go straight up to 100K quickly. And then some selling, see some profit taking, and even a retracement back to retest the market cycle high, the prior cycle high around 70K. That would make sense. And then pushing up higher into that region of around 155K Bitcoin. And so from there, it's anyone's guess. We certainly could see it push higher into this kind of a pattern. We don't know yet. I'm leaving that open as a probable level here at 155, but a possible level up to 210K. Now, stay with me again, because that case study at the end is really fascinating, and you're going to enjoy that. So let's move on a little bit. Here's the weekly chart of Bitcoin. Here's some scenarios, where we've come up above the bull market support band, which is good. It got a little overextended, and certainly we can see some sell pressure and resistance level here. So I think we do pull back and take a dip back down below a bit, maybe 32K. Maybe back to 30K, and you can see I have noted on my chart here, buy on the pullback. The CME gap is still down around 20K, but at this point, I don't think we get there. We have a nice upward trending channel, and I think the CME gap is we can write that off. I don't see us going back down there at this point. I think we pull back a bit, and then we push up higher to that golden pocket like we talked about, retrace, and then push higher and new market cycle highs. So that's what I'm seeing here, and so let's just move on a little bit to the next chart here, and a different look at this, slightly different look at this, where we can see that uptrending trend channel, and so does it? We certainly could push high up here and continue back up on the top of this channel, but I think again we pull back and then go higher. So trying to get down to the daily here, we've got this is the 2-week chart, by the way. And let me show you a couple things here on the bullish scenario. We could see this continue to push up higher to 50K, but again, I think it pulls back. But the bullish sign, if it's just too strong and that DXY drops and we push up to that 50K, then we would see a pullback down, pull back to around 42K, I think, and then kind of break up higher into trying to hit those higher ranges. And so let's hide the trend channel. Let's see, I'll leave both those on. The fib targets we looked at already, and the rationale was that was the same thing we did last cycle. So cycle high down to the low, pushed us up to that 69K on the 3.618. So I'm also drawing that same scenario on this chart. Doesn't mean it has to happen exactly, but it's a pretty good earmark. And so far, it's looking pretty good on that. All right, let's see. So let's jump down into this chat here. I'm going to turn on the, I've got some other things to kind of look at in terms of this. Let's see. Actually, you know what? I think we've covered this. And what I want to do is not really get into individual coins. I do want to look at, we can look at Ethereum really quickly. Nice cup and handle sort of forming. I've drawn that on there for us. If ETH can break 2200, then I think it's got a nice push up here, and depending on how high you think it can go, I mean, I think ETH can go to 15K. So it's got a 7x here, 732% potential. Doesn't mean it has to. We need to break that 2200 level first, and then see what happens. But I'm holding ETH. I think I'm bullish on ETH as well as Solana. There's a lot of speculation that Solana should be worth 20% of ETH. So if ETH does go to 15,000, that puts Solana at right around 3,000. And so looking at that, if we get up here, up into this range at the price of 3,000 on this bullish scenario, and other people have also been speculating $3,000 Solana, that's an 80x from here. You guys actually let me on a pullback, that would be 80x. If we say from here, it's a 58x up until that top of that range potentially. And if we're a little more conservative and we buy in a pullback here and we go up to a 3.618, then that's still a 25x on this projection here. So keep that in mind on a pullback, 25x here to the 3.618 Fibonacci. So these are just some zones to look at, and of course this buy zone on a pullback back. If we get back down in this lower range in the $40, I would be buying Solana. Not financial advice, just giving you guys some targets. Let's look at the total market cap here. I'd like to see this hold here. Again, looks like it's due for a pullback, push right up into this $1.4 trillion level. You know, we struggled along here. We held above a trillion. So important because these big round numbers obviously have been pivotal, with Bitcoin coming right up to the $3 trillion. Total market cap was the high of the markets. Came back down, tried to break up higher again, struggled at that $2 trillion market, and then of course we fell all the way back down around 760 billion. So struggled there a while, but back above a trillion, good sign. I think we pull back here in this uptrending channel, maybe pull back to around 1.79, 1.8 trillion, and then bounce, break that level where we're stuck around 1.4. Maybe up around here, just a speculation, and then come back, retest that, and then push up to that $2 trillion level. And from there, we'll see. But of course, getting above 2 trillion and pulling back, then it's a bounce back to old market highs. So looking good there. So I think that's what I wanted to cover with you guys. Bitcoin dominance I did want to touch on real quick because there's some interesting things happening here. So again, that Fibonacci golden pocket from the Bitcoin dominance prior high down to the lows would push us up to that 61% level, 61 level, which has been very important in the past. We saw it resisted here, got above it through, as we headed into the 2021 bull market. And then as people were taking profits from Bitcoin into other coins and altcoins, Bitcoin dominance dropped. But I think we do need to get up to that range first to really kick off and lead the bull market. And as we can see, it's a golden, the 61865 Fibonacci golden pocket, similar as we drew on the actual charts. Okay, so and then of course down in these ranges down below, I'm gonna take that down because I think that's not something we need to look at now. It was a concern months ago. Would we head lower, but we are clearly in an uptrend. And so I think we hit this area around 60, 61%, a bit of a pullback, and then break through and break out to the upside. So that's Bitcoin dominance. And just taking a quick glance at USDT, some money, markets are pulling back, some money flowing into stable coins, but largely USDT has been going sideways. And, what we'd be worried is if we saw a huge increase in money flowing into stable coins like USDT, but we're not seeing that. We're just seeing this as sideways action, and I don't expect that we will. Okay, well, so with that, you guys, very exciting analysis here I want to share with you. So I had one of my traders here and one of my coaching students was asking me, so how can we determine the next bear market bottom? And would you agree that if you ask better questions, you get better answers? So I said, that's very interesting. Well, why don't we take a look at this? So what I'm going to do is put in some price targets here just to kind of establish where we've come from. So these are the market cycle highs and lows going all the way back to really the first real cycle back in 2013 at a whopping high of 1,251, pulled back to 172, pushed all the way up to that 19,000 high, give or take. These aren't exact. It's hard to get these prices right on the exact number. And then that pullback, remember the fib pullback, which we saw go up here. So I'm just trying to reestablish some of these numbers here for you, but bear with me. This is very cool. So we have the price labels. We talked about the Fibonacci projections, okay, putting us around 210,000 potentially as the market cycle high. If we'll allow for that and put on these fib extensions, this is where it gets very interesting. So based on, I'll open this up for you guys. So based on that market cycle high, low, high from 2017 to the low in 2018, low around 3,000, up to the last market cycle high, which was in 2021, the subsequent pullback to the market low. Let me do this. I'm going to turn this other one off so we're not too confused here. So let me open this up and I'm going to turn these off. Okay. So what that shows us is where did we stop? Where did we bottom? And I was looking at various Fibonacci's and none of them aligned. We bottomed exactly at the 3.14, which is pi. And if you're familiar with the pi cycle top and the pi cycle bottom, pi has a strange relationship and a unique relationship with Bitcoin. So isn't that interesting? The pullback from the 3.618 extension or the Fibonacci retracement up here, and the pullback was 3.14 from that market cycle high. Okay, so obviously we need 3 data points. If we did a fib extension from the prior high to the low, we would also need to know that high point for that to happen. Now, we've already established potentially that's around 212,000. So if we then draw that, I'll even draw a fresh one here, from here down to the market cycle low, all the way up to this 212 level. Okay, now I need to change this because I saved the settings on this to, I'm calling it the fib extension pi bottom. Okay, so now I'm looking at that pi bottom retracement 3.14 pulls us back to around 54,000 as a potential market cycle low in the next cycle. So we'll be watching that. And let's see, actually on the other ones I had it gets a little janky when if you're not exactly precise on these. So let me turn these other ones on and we can take a look at that with the ones I'd already drawn. Yeah, because it was a little bit different. So let me do the ones that I had drawn previously. I was really careful to get those right. So I wanted to have you see me draw that, but I did it a bit on the fly. So here's what it really looks like, and it really is down around 45,000. Is that 3.14 pi retracement? Very interesting. So we don't know. I'm going to definitely keep an eye on that. And so, what I would expect is on the next cycle, we certainly, in the bear market, would come back and retest the former high around 68K. But because we know, and I'll turn on these retracement ranges, because we know that Bitcoin typically will come back between 77 and 85%, that also aligns, right? So if we go back here, to the high to the low, that was a retracement of 78%. It was a bit higher in prior cycles, but we would expect that to normalize a bit as we go forward. So here again, 77% from the 2021 high to this November 22nd low. That was 77%. So a respective retracement here would be right around that $45,000 level. So isn't that interesting that we're seeing some confluence on that? So if you like that, definitely hit the like button down below. And I thought you might enjoy that. So that's all I have for you today. But just so you know, there's also something else. If you like this analysis and might want to be part of this on a weekly basis, I'd like to tell you a little bit more about a program called Moonstream M3 Trader. And you can find out more about that at moonstream.io/training. And that's max training, actually. So moonstream.io/max training, and you can learn more about that. And also you can get a cool hat just like this. As soon as that loads, I'll take it there and we can talk about it. But there's also a video, actually I believe it takes you to this video here where it'll give you an overview and a presentation about this program. And if you click on the button, you can save a lot of money on these for this sort of Cyber Monday kind of week-long pricing. And you can look at that there. We've extended that to annual pricing. It's a weekly class with me. We do a live every Wednesday, and you get access to our indicators and a bunch of other stuff that I won't go into here. Just go ahead and watch the video, and you can always click through to the information page here. So again, if you go to moonstream.io/max training, so Max has allowed us to kind of put this out to you guys and show you what it's all about. You can learn about this, and it's my active trader class. So we're in here in a weekly basis, live classes, daily basis in a live chat where you can chat with me, ask questions, and also some other resources like our interactive portfolio tracker, our dollar cost averaging worksheet, and some other bonuses like this candlestick pattern cheat sheets and other things, if this makes sense for you. But either way, hopefully you got a lot of value from this, and keep an eye on the DXY. So we want to see that continuing going lower here, as we said, and that could certainly push Bitcoin up into these higher ranges. But I am extremely bullish on Bitcoin and the overall crypto markets, and just be aware this could happen much faster than people expect. So make sure that you follow along with this, and you can find this exact chart. Follow along with that if you Google me on TradingView, or you can find me on Twitter with occasional other recommendations and picks and just ponderings on charts and various other things crypto. So anyway, thanks you guys. Moonstream.io/max training for more. And again, if you like today's video, make sure you like the video below and subscribe to the channel. And hey, let me know your comments down below. I'd love to hear what you thought about the future possible market bottom based on the analysis. All right, take care, everyone.